All right, guys. So today we're just gonna do a quick breakdown on gold and NAS, of course. That's our main pairs. All right. So we heading over to gold. Obviously, we're gonna do a top-down analysis. So we're starting on the higher time frames and coming all the way down to see what potential opportunities the following week has in store for us. It's Sunday. The market is currently closed. It's Sunday the 28th. All right. So again, let's see what we could look for potentially in the week. We have a lot of bullish momentum on the bull right now. Higher lows are being formed continuously. Highs are continuously being broken. Right, so that means there's a higher probability that price is going to continue to the upside on the daily time frame, and we could see the same for the H4 also. So seeing that those higher time frames are giving us the bullish bias, we could confidently just look for buying opportunities when we come onto these smaller time frames now. All right, so let's start to do some structure mapping. Let's see what's going on with regards to structure here now. So, I mean, we just kind of turn out some highs here. We had a break here, counter trend, price created a low down here, giving us well, this was a retracement, and then price broke above this high up here, creating a new high, and then retraced here again. If we pull the fib, we could probably measure that this was a 61.8 retracement. And then we had a push to the upside again. All right, so push, well, higher high, higher low, higher high, higher low, higher high because it's higher than this high. And of course, we would be expecting some sort of higher low to give us the push now to break above this high and continue to the upside. All right, clearly, again, on the higher time frames, we could see that gold is already very bullish. So again, we're just looking for bullish opportunities on the smaller time frames. All right, this isn't simple market structure, higher highs, higher lows. We obviously going to get in on the higher lows. The key, of course, is to track the counter trends to see where the counter trend is ending on the smaller time frames and to look for a smaller time frame entry, more than likely in the form of a bullish engulfing candle after a higher low up and form. All right, so that's kind of like what we're looking for. Again, we have the bullish direction for next week. We're not seeing much in terms of structure right now. Of course, the market is closed. We had this shallow form here, price created this high up here. So the last high in the market. And then we had a high low here. And then another high low. All right, so we kind of maintain what we obviously maintain the bullish momentum all the way from the higher time frames to the lower time frames. All right, so next week, what we could look for, of course, is price making structure similar to this here. Not exactly like this, but very similar, of course. So you want to see price breaking above these highs here, retesting, giving us a high low, where of course I said we would monitor the counter trend, which is this move here to the downside, see where the counter trend ends, and look for a bullish engulfing candle or a bullish variation on the smaller time frame, such as the 5 minutes, 3 minutes, potentially even the 1 minute, depending on how volatile the market is, would depend on the time frame that we use to enter with also. All right, so that's just something that we could look for in the following week, especially in the beginning of the market opening. So like Sunday evening into Monday morning London, we could even see moves like this that we could start to take gold to the upside. All right, and then of course we're just gonna keep, of course, want to see structure, just keep looking at this because we're taking advantage, sorry, of the bullish opportunities that price given us because we have a higher time frame bullish bias already. All right, so that's pretty much it for gold. Let's see if we could go down on NAS really quickly. All right, let's use another chart. Use something random. Like this one isn't random, but try another one. Okay. Just one more. Okay, cool. So on NAS, we again top-down analysis. We start on the higher time frames, and we looking to see where price is going in terms of direction on the higher time frames. Let's remove these charts. I removed the wrong thing, but that's fine. We don't really use indicators anyway. It's just to be fair, sometimes I doesn't even realize that I have indicators on the chat. It doesn't really matter that much. But anyway, so we're on the daily time frame. So we're on the daily time frame. All right. So what do you think is the most relevant type of price action that we should be looking at to give us a bias? Well, the most recent candles. I mean, the daily time frame is such a high time frame that each candle carries a lot of weight, carries a lot of volume. You don't need to look at the entire market like all here or whatever. You just need to literally look at the momentum. These are momentum time frames, basically. So, I mean, I spoke about this in the earlier videos, but I just want to make this video short anyway. So let's just get right into it. Sorry. So we have on the momentum time frame, the daily candles. We have 1, 2, 3, 4, 5 days of back-to-back bullish momentum in the market, which clearly confirms to us that we are higher time frame bullish. We have more of a bullish bias, more of a bullish directional bias in the market. So we could now again use that same information, go down onto the smaller time frames and see where we could get buying opportunities. All right, so we are on the H4. Again, price is pushing to the upside very strongly. Go down to the 30-minute time frame. Yeah, we could probably put some things on the chart now in terms of analysis, just to give you guys a general idea of what's going on. All right, so we just measuring the push move that we just saw there. Not too sure why we get in this lag here, but just bear with me. All right. We have a high low here and the area of support that was formed here. We're actually still trading at this area. It's a consolidation range, price range at the moment. All right, so now because price, well, we clearly see that price is in a range. What we can do, seeing that the market does consolidate, so something that is well, a useful belief to have at least is the market's trading in consolidation is still tradable price action because the reality is the market moves in three directions. It goes up, goes down, or it goes sideways. All right. And because you have to consider sideways as a type of price action that the market makes, you also have to consider the fact that you need to develop a system to trade this type of price action because it is always going to be present in the market. All right, so when the market is consolidating, what you would do is take buys off the bottom of the zone and take sells off of the top of the zone until price breaks the zone. Quite literally, that is it. I mean, you're not going to enter the sell at the top and have your TPs at the bottom. Right. So if you have a buying opportunity in a zone, for example, a consolidation zone, price range, whatever you call it, you would have a stop loss somewhere like here because you're taking the entries on the smaller time frames, obviously. And your TPs are going to be somewhere within the zone right before the top of the zone. You want to ensure that there's a higher probability that you get your TPs hit based off of your risk to reward ratio than you put your TPs at the top and price doesn't really make it to the top or it's like retraces before and goes back to your entry area and you get stuck out that break even. All right, so that is pretty much the concept that I want to put into perspective here for you guys. All right, so again, we have overall bullish momentum on the NAS. However, current price action is in a price range, so we're just going to trade the price range using that same concept that I just spoke about until, again, the market either breaks the downside, which it can do, gives us a lower high, which we can enter a sell off of, and take price to the downside, or the market comes back up, which we could take a buy off in the smaller time frame, by the way. into the zone. In the zone, sorry, we can take buys within the zone. So some TP area around here. I'll get to it when we go down the small time frames. And then price continues to the upside with the overall bullish momentum, which we spoke about. And then we could take a buy also up here, which will be the more valid entry in terms of our retest entry system. So we just kind of using different entry systems based on the type of market structure that we're seeing. All right, so a lot of speculation, of course, but this is just being prepared to get into the market regardless of what the market does. If they can't predict the markets, all they can do is adapt to what it does. All right, so on the smaller time frames again, I'll just go down to the 5 minutes. Now all of this is looking like a lot of mess, so let me just clear that up. And it's all right. Right. So on the 5 minute time frame, we could see the market is making at the moment lower highs because it's still in that bearish counter trend. Pushing to the downside. Again, because we are in the zone, we just want to see something like this. And then we would get in on the high low stop loss below the lows, just like how we would in a regular retest entry system. TP somewhere there, which is right before these highs, which means again we have a higher probability of hitting the TPs if it is not at the top of the zone up here. All right, so that is pretty much the concept for today and the breakdown. All right, I'll see you guys soon. Have a good. Oh, by the way, the year is ending. January is approaching very, very soon. I honestly wish you guys a fantastic trading year next year. All the best, of course. More successes, more growth, more wealth. You have to put in the work though. All right, so it doesn't really come easily. Back tests, journal, live trading, take risks, prop firms, whatever the case is. Reading trading books. Everything that I said there is 100% relevant, by the way, and mandatory, I would say. So once you incorporate all of those things into your daily aspects of your life, you will definitely start to begin seeing some results within your trading. Speaking from experience. All right. So again, have a great year, guys. All the best.